Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Closer Show. As always, Scott Carson, your host. Excited to be here today. And today's episode is something that a lot of real estate investors strive towards. And I should probably classify real estate investors, which is such a very broad niche of people out there, into kind of two categories. You have, as I like to say, the cash flow guys and gals, what they're, the landlords, the performing note investors, also the non-performing note investors in there, the Airbnb individuals, the subject to guys, the owner finance guys. That's all about the cash flow. And then you also have as I say, the bigger check guys and gals, the wholesalers, the fix and flippers, the people that take the property, the wholesalers, those kind of things that they're buying and selling and flipping. Two different completely type of transactions for the most part. I'm not saying that there isn't some crossover between two. You have a lot of landlords that will buy properties, fix them up, and then keep them for cash flow. You have a lot of non-performing note investors that buy the debt, work it out, and it becomes a performing cash flow on the other side of the balance sheet for them, okay? You have a lot of people that wholesale assets, they may get a quick buck, and they evolve into taking the assets over, okay? I think I'm a big believer that true financial freedom comes in having cash flow, no matter what your game is, of having cash flow coming in, that if you want to take the month off to go travel, you can. If you want to take the month off to travel around, summer league baseball or preseason, or, do all those things, you've got the cash flow coming in on the one side, whereas the fix and flippers, the wholesalers, the people that buy are constantly having to buy to generate those bigger checks. It's a little bit longer time frame than I'm buying a property and then I have a cash flow coming in. I mean, we've all heard, cash is king, and don't get me wrong, I like having both sides of the equation. I mean, we had an asset today that it's been cash flowing for about 12 months, and then now the borrower completely paid off their mortgage. It's a good day. They paid off their mortgage. They own the house free and clear now. They're good to go. So there's a couple things that I want to discuss with you, because as we get into the last quarter of 2019, many people are starting to evaluate and look at what they have or have not accomplished this year, and then looking to 2020. And 2020 is 2020, baby. Hindsight is always 2020. So if you can, the best thing you can look at is, for those that are taking action and those that aren't taking action, is to have your clear plan of what you want to accomplish this next year, what you want to accomplish. Because I'm a big believer that a lot of things have taken place this year, and a lot of things are going to take place next year as well. I mean, we're still, in the early stages. We're still in September, so you still got October, November, December. The last quarter in the note game, in the note business, is always the busiest time of year as banks are evaluating things. And it's hard to believe that the year is already 67% of the way done, almost 70, 75% here before too long, depending on when you're watching this episode, listening, or hearing this episode. You have to realize that, now is the time to start planning for 2020. Now, yes, the year's not over. We're not saying goodbye to 2019. That's not what I'm saying. What I'm saying is you have to look at what you want to accomplish, because my goals have changed over the years. They've changed from the fix and flip big check side to, let me turn to the cash flow side. And I would rather have cash flow these days coming in monthly where I can do what the heck I want versus the bigger checks. Now, in some situations, you've got to, at some point, I got to cash out of some deals. And so those deals offer bigger checks, whether you're refinancing out your money, or you're refinancing out investors' money, or you're trying to take down a bigger asset. I'm going to give you a great example. 1031 exchanges, people are cashing out, selling those assets off, then they have a limited amount of time to identify another property to move that money into. Now, they can't go buy notes with the 1031 exchange, but as our buddy Dave Foster, who was a previous guest on the show, talked about how a lot of people can use their cash to buy into another investment property. If they're using all the cash to be free and clear now, then they can then take out a line of credit against the property and use that money to buy notes and leverage their funds in 1031 exchanges that way. Very few people do. We have Merrill Chandler on our regular basis talking about using lines of credit from banks and how to become more fundable or more effable, as he likes to say. It's a great way to use that to actually build lines of credit to go out and make some things happen too for you. What I'm trying to get at is you have to be prepared, start preparing now for what's going to happen down the road. You can't wait till the last minute, wait till December 28th, 29th, and 30th and 31st to start planning for 2020. You'll be behind the 8 ball, and then you'll be a month late. So the sooner you can start, the better. So what am I trying to get at with this episode being called Cash Flow to Freedom? I just want to set that precedence a little bit of where to look at. Cash flow is a great thing. I've seen some of my best friends who have been big and heavy in the fix and flips, buying and selling houses, realizing, man, I should have kept some of those. Jason Bible will often talk about, man, if I held on to the real estate, I'd be cash flowing $1 million a year just off the turn. I mean, just the cash flow. Okay, great stuff. So here's what I want to get at. If you're in a JOB and you're looking to leave your JOB, one of the things I always talk about is take what number you need to have each month come in so you can take that month off, or to take whatever off you need to be. And I'm not talking about to skip by. I'm not talking about a staycation. I'm talking about a true vacation, okay? What do you need to pay your bills? What do you need to pay everything, your office, your utilities, where you're putting away monthly things in your retirement, whatever it might be. What are the things that you need to be doing as far as an amount to get that money coming in so that you can say, see you later? Well, being an financial advisor always say, oh, you got to have $1 million saved, or $4 million saved, or $5 million saved by the time you retire to be able to live the way you want to be, because your income's going to be less as you retire. Your tax brackets will be less when you are than where you're at now. And I can get that. I can respect that. But I think that's a backwards way of thinking, especially if you're in the real estate game. I like to take it, okay, if you need 10 grand a month coming in to live what you want to do, it's 120 grand a year. That's a pretty good, that's a pretty good living in almost any part of the country. Might be a little light if you're in San Francisco or New York or stuff like that. But if you got 120 grand coming a year, great, 10 grand a month. And then just break that down, okay? That means if you need 10 grand a month, you divide that by, we'll say $500 a month on a mortgage payment of deals that are coming in, something that's paying you monthly $500 a month, whether it's a rental where you're getting that net, or a note deal, or you're an Airbnb or something like that, something that you're getting $500 a month above what your costs are to that your investments are. That means you would need to do how many deals? Well, the magical number is 20 for that. Okay, 20 times 500 is 10 grand. Now, if you needed, you wanted to work a little bit, if you wanted to have your number be $400 a month, well, that'd be really easy. That number is 25 deals. Okay, so those are some of the numbers you need to look at. Now, if you need, let's say 5 grand was what you need to say goodbye to your job, that would be 10, right? Okay, or roughly 12 to 13. All right, that's a number that's feasible. Okay, it's very, very feasible, that you don't have to be scared about and run screaming that you don't have $4 million in the bank. Okay, that's the beautiful thing about real estate. You can leverage what's going on. You can leverage the deals they have to have that stuff. So here, that's the thing to look at. Cash flow is king. Now, let's say you're buying some more valued assets. You're getting $200 or $300 a month coming in. Great. There's nothing wrong with it. I would make sure you're getting at least 200 or more, especially in the note space, because your servicing costs can eat up a chunk of that. So you want to calculate that into it. But let's say you're getting $250 a month. Okay, great. You need 40 deals. That can still happen. If you build a plan and you really look at working that plan and having a little patience, it's a whole lot better than trying to go out and sell dish soaps or veggie bars or whatever it might be. Okay, it's a lot more effective to do these things than it is try to run an MLM. If you're wanting to watch an interesting series, Showtime has a new one with Kristen Dirtz called How to Be a God in South Florida. Total about the MLM and kind of the Amway thing of doing things. And I think most of our entrepreneurs have been a part of some sort of multi-level thing, trying to get rich. You got to love the entrepreneurial spirit, but it's a pretty funny show and pretty spot on with some of the things they say and other things. But anyway, we're not talking about that. We're not going out and telling you how to recruit your family, recruit your friends, recruit everybody you come in contact with, be that kind of annoying MLM person. We're talking about something that you can do in the real estate space You just got to have the numbers behind it. So cash flow is king, okay? Definitely is king. And we'll get to a little bit of the differences of the things to look at here in a little bit. But anyway, so taking, let's just say the 10 grand number, $500 a month or $400 a month, whatever, taking the 10 grand divided by the average number you're getting in, okay? So let's shoot low. Let's say you're going to see $250 a month above taxes and interest, you know, splitting your payments, paying off your investors on that stuff, $250 a month, okay? It means you need to do 40 deals if you need to get 10 grand, okay? Or 20 deals if you need to get to 5 grand, whatever that number might be, right? We'll take that number that you need deals and multiply it times 10. We have seen that a lot of investors have about a 10% closing ratio. Now, the thing to keep in mind, that's awesome. If you make 10 offers, you get 1 accepted, you're doing really, really well. And that's going to be different for notes. It'll be a little bit different for your price points you're playing in and where you're coming at. But assuming you're in with the market, you're making offers, 10 offers to get 1 accepted. And you may get 10 accepted right out the gate, but through due diligence and working through the deals, you may identify that, oh, the collateral doesn't look good or it's got an issue in the neighborhood. You may end up eliminating 90% of your deals, but 10% is still not a bad closing ratio, okay? So now, if you needed to do 40 deals at $250 in cash flow coming in to get 10 grand monthly cash flow, that means how many deals need you to do, okay? Well, if you needed 20, if you needed to do 40 at 250 to get 10 grand, it means you need to make 400 offers to get the point. Now, the whole goal we're shooting for here is we have our runway, okay? We're starting here at 0. We're working towards that liftoff in, we'll just say, end of 2020, 15 months from now, okay? So if you take 400 offers you need to make in 15 months between now and December or New Year's Eve of 2020, what does that come to? Well, math's not that hard to figure out. 400 divided by 15 months, that means you need to make roughly 27 offers a month, okay? 27 offers a month divided by 4 weeks on average in a month is 7 offers, 6 2/3 offers every week. It's basically 1 a day. Now, are you going to be making an offer on Monday through Sunday? No. But what we're talking about is, as you've seen portfolios coming in, you start seeing deals coming in, you're going to be making more than 1 offer usually on these tapes that come in. So start tracking how many offers you're making, how many you're getting accepted. Now, the big thing I would tell you is keep this number where you can see it somewhere. See that 10 grand number parked by your bed, by your in the mirror. Keep the goal where you can see it on the fridge, and as or on a chalkboard, or as you're closing deals, I share that with your spouse, with your family. Hey, we closed 10 note deals out of the 40 that we need to do. Our cash flow is that we're at least 25% or more, or roughly on our way to getting there, to getting to the point where we've got this stuff coming out on a steady cash flow basis. Now, I'll cover a little bit here in a second, because let's face it, not everybody's going to keep paying their mortgage for 30 plus years. You're going to have some cash payoffs, you have some foreclosures, other things are going to happen along the way. But the idea here is that you get to that point, then you can make the decision. You don't want to go cold turkey and quit your JOB, because that's not a smart thing. All right. If you don't have reserves or money in the bank or other income coming in, quitting your job is one of the worst things that you can do as an investor. It's one of the worst things you do for your family, worst thing you do for your spouse. For mama bear, okay, or papa bear. You want to try to make sure that they're safe and protected, and you got plenty of ramp so that if something does happen, you've got some money stocked aside. So here's what I want to get at. Cash flow is king because it comes in on a regular basis. The first of the month or the fourth of the month or every 2 weeks is great. That's something that you can start looking at and start planning that stuff out. Those are the things you can look at, start putting where you're going at. So one of the things that I highly recommend that you do, we've done this for years, is put your deal flow. I need to close 40 deals, okay? Or I need to make 400 offers. I've made this many offers so far. How many accepted? So you can start seeing your closing ratio. And as you get closer and better skilled, better equipped at your bidding process, your due diligence process, your closing ratio will go up. It'll improve from 10 to 15 to 20% to 30%. Okay. It'll also depend on what kind of deals are available in the markets you're looking at too. So that's the thing you want to look at. I've had a lot of people reach out to me in the last couple of days, say, "Hey, do you have anything in the Western states?" I'm like, "No, sorry. If you're looking for stuff in California, Arizona, Nevada, you probably don't want to be. It's probably going to be more of a part-time basis. Not saying that they don't have distressed debt out there. It's just I think it's overpriced for the most part. You should wait a little while, let the market recover. Well, the market has recovered. The market kind of take its turn like it's doing to in different areas. But anyway, getting back to the numbers, start celebrating those things. Start putting, hey, I got a goal and give yourself a little ramp up. Say that by the end of the first quarter 2020, which is 6 months from now, I need to be at least 25%. Because your first 90 days is a big learning curve. Your first 90 days, hey, if you get some stuff closed, great. You're working through that. But you have to expect it. By the time you buy a note, it's going to take, especially a non-performing note, it's going to take 90 days to get that note reperforming, servicing, transferred, docs all taken care of to start stuff rolling in for the most part. You shoot for better than that, but just budget 90 days, okay? 90 days to make that stuff happen. Just process of things, okay? But that gives you that ramp up to start getting, so that at the end of we'll just run some numbers. End of the first quarter 2020, you're 2,500 a month coming in, okay? All right, and you grow to the point where by mid-year, you're halfway there, okay? So let's figure that out. If you've got 250 by the first quarter, 2,500, and then you grow that to half your goal, half of 10 grand to 5 grand, technically you should have made, if we just do 0, 0, 2,500, 2,500, 2,500, 5 grand, you should have roughly at least 10 to 15 grand sitting in reserve. Now, that's the thing is, if you're working at JOB and you got money coming in, do yourself a favor, sock it to the side. Don't try spending it. Don't go out and, woo! I mean, you want to celebrate a little bit, but don't have, and you may need to give a day at the spa or a shut-up check to your spouse on something that comes in. Great. But don't be living, hand to mouth if you can. Try to sock that money away, put it away a little bit reserved. I understand you got bills, you're going to have expenses, you're going to have some legal stuff. We get that for the most part, some repairs. That's going to happen. But hopefully you've calculated that into your funding amount because you're buying at a discount for the most part. So you're usually having a little bit extra funded towards those things in your total overall budget. But we'll get to that later on. What I'm trying to get at is that if you're building this up at the end of year one, if you're starting out in 15 months and you've got 10 grand a month on average, building up to that, we're at December, then you can make that decision. Hey, should I stay or should I go now? Okay. I honestly think if you're doing a great job, that you're being diligent, you're adding assets to your portfolio, you're bringing in cash flow. Hey, I know it's easy to say, I'm going to quit my job a year in, but do yourself a favor. Maybe continue to work both places so that you do build a little bit more reserves. You get a little bit more honed in. You got your systems honed in a little bit better because your systems can eat you alive. All right. Now, getting to 40 deals in your first year, that's a lot of deal flow. Maybe your deal's probably not, your numbers probably aren't going to be exactly at 40. It may be less because you may have bought more than an average of 250 cash flow when you're buying, when you're getting 300 or 400. You can figure those numbers in and see where you're at roughly. Okay. But for shits and giggles, we're trying to make it easy and simple here for everybody with the math. So getting the cash flow aspect of things, now you got some stuff rocking and rolling. That's the biggest thing that I see most note investors that jump in full time. They don't have the cash flow to cover their bills. They don't have things covered on the home front before they make that deep dive into the pool. There's nothing, and you've never heard, I guarantee you've never heard me, hey, quit your job, become a full-time note investor. No, make sure you've got your numbers right before you become a full-time note investor. Make sure you've got things right. And this is not saying that you're not going to dabble in other things. Every note investor I know deals in performing and non-performing. It is just what it is. The only people that don't dabble in, especially you get a lot of people only buy performing, at some point they deal with non-performing. Now, which exit strategy they go through, whether it's foreclosure or deed and lose, cash or keys, short sales, whatever, is up to them. But, there's other ways to deal with assets than performing, okay? Maybe you take the asset back. Maybe you do a deed and lieu, cash payoff, short sale. We could spend a whole other episode on exit strategies. What I'm trying to get at with you guys and gals out there is knowing that, hey, yeah, 40 might seem like a daunting number, but maybe it ends up being 25 or 30, okay? Maybe you take some assets back where the borrower walks away and you sell them for the bigger check side of things. Great. Take that profit and sock it away. Tithe to yourself. Okay. My dad was was ordained. He went to school to be a minister, and tithing is always big. People tithe to the church. They tithe. What happens a lot of times is people will spend all their money tithing and helping others versus helping themselves. When the good Lord wants you to help yourself, and then make sure everything's covered first, and then feed the world with your overflow. And I think it's a mindset a lot of people have is we put a lot of others first before we put ourselves first. Look, I know I've done that before, put others first, but when I should have probably put myself first. Hey, it happens. When you have a big heart, that's one of the things you do. But you have to look at, hey, what do I need to do? Do I need to shrink things in a little bit? Do I need to take care of what we need to get covered first and then be able to give a lot more, give exponentially more afterwards? That's something to think about. It's going to make more sense for me to focus on this for 90 days and do more later on. Great. Or 120 days or 150, 180. If you really put some solid work into your first 6 months, starting September, starting October, and really work out well the next few months we have here in 2019, it will exponentially help you grow your 2020. A lot of people are like, I'm going to wait till the first of the year. I'm going to wait till I get this all cleared up. Look, I can understand that, and I understand being busy. But even if you can spend an hour a night or an hour every other night working on your note business in some sort of fashion of putting systems in place, putting in your working your due diligence or working your marketing, that stuff pays off exponentially in the long run, because this business, to get to cash flow, comes down to two things. First and foremost, you're going to need capital, but you're going to need the deal flow first. And so don't let that, I need 40 deals, but oh my gosh, 40 deals at 25 means I need to raise $1 million tonight. No, it doesn't mean that. We're talking that you very easily, you can eat that elephant one bite at a time. You can take down that big number and bring it all in. Because if you figure this, let's figure something here. If you needed $1 million to retire, okay, $1 million retire and making 8% interest on your money is how much? It's 80 grand a year in interest. Well, 80 grand a year, divide that by 12 months. Is basically $6,700 a month coming out in cash flow. That's roughly 13, 14 deals to get to that number in cash flow. And that's average of closing one deal a month, roughly one deal a month for 12 months to get that point where you can have that number start coming in where it's 80 grand a year. Now 80 grand a month, 80 grand a year coming in to hit that 6,700 number. Think about that. That's reverse engineering thing, and versus says, so hey, I got to put away $100 a week or 3% of my paycheck in my 401k to have it matching. There's nothing wrong with that. Now, honestly, if you've got a 401k matching, it's cheapest money and best ROI and your money will ever going to see with matching. Use that, leverage that, but make sure that you're understanding the numbers to hit that cash flow. Understand the deal flow. Understand the closing ratio. Some people believe like, oh my God, I only have 50 grand in the bank. That means I can take down one note and I got to wait for that. That's a narrow way of thinking. That would be like to call stinking thinking. No, get out, talk to people, get out and network. Go to the different events that are taking place. Go out to your local RIA clubs. Go out to your local BNI groups. Make the rounds. Talk with people. Share what you've got going on. And you'll be a lot happier in the long run because you've built a good foundation in place. All right? You've built some great things. Going out your local RIA clubs are great for knowledge, and raising capital and some things. But what you have a lot of times happen that if you're really serious about it, especially like here, for me here in Austin, Texas, we've got a couple RIA clubs that meet. They're not focused on the note space. They're focused mostly on the market or other markets around Austin, San Antonio, San Marcos, New Braunfels, stuff like that. That's great. But they're not really a great place to raise capital, not a great place to find note deals for me here locally. So that's why you've got to look at where you're at, your market, and go identify those things. Now, if you're in a market that's, as I like to say, is a target-rich environment for deals, Ohio, Indiana, Illinois, Michigan, Carolinas, Tennessee, South Carolina, North Carolina, hey, great. Maybe you can find special interest groups or small groups in the area that are networking there locally. I still think your biggest bang for your buck is let's run the numbers back a little bit here. Let's take it one step further and find the deal. So you need to make 400 offers, all right, to get 40 deals that you end up closing on, basically accepted at a 10% closing ratio. How many emails do you need to send out? Well, or how many phone calls do you need to make? That's a number that you have to look at. And the only way I can run that by you is what you would expect if you're making phone calls 3 times a week. Okay, making 50 to 100 phone calls. You make 50 phone calls, you're probably going to talk to 13, 14 people. You're probably going to come across, on average, 1 to 4 lists with those numbers. It is what it is. I see it. Open rates on your asset manager emails are going to run around somewhere between 9 and 12%, 9 and 15% over time. Sometimes higher depending on the list that you're working, and that's okay. Okay. So that's what you have to look at. If you're getting 50 phone calls in, you're going to have that ratio if you keep doing it on a consistent basis. I'm not just talking once and then never calling that investor or that bank back. I'm calling 4 or 5 times. So 50 phone calls, do that over a 4-week, a 5-week period. You're going to start seeing some activity. That's 3 days a week if you can make 50 phone calls. It take you 2 to 3 hours to really dial for dollars and have success in that aspect of it. Or you're leveraging LinkedIn at night. So that's the thing to look at. If you know that you need to probably, what would I say? Say you probably need to make 400 personal connections with asset managers. Now, what I mean by personal connections? One-on-one, you connect with them on LinkedIn, you shared an email back and forth, shared a phone call, something like that. Somebody who's looked at your stuff at least 400 times. Now, 80% of sales are made up for the 5th contact. That means you really need to probably solidly have 80 connections that you've talked with them at least, or connected with them, or communicated with them at least 5 times. Okay, 100 true asset managers, 80 to 100 asset managers can often feed you enough deals that you'll need for the entire year, depending on where they're at and who they bank, who they work with, their banking, their lending portfolio, and things like that. Now, if you start leveraging tools like LinkedIn, Lane Guide, Bauer Financial, those things, or Distress Pro, that can increase your close ratio and can narrow down the number by using those things to target. I'm still a big believer that you should batch, shotgun approach things, and those that have something will come back to you, and then you narrow down your list off of those that have responded or clicked on your email or showed some interest in your emails, your contact, as a way to kind of work those lists a little bit smarter. We'll talk. One of the things, we've got a workshop coming up this weekend that we'll talk a lot about that and kind of the smart way to build an asset manager email list and contact list to be able to reach out to. So, let's keep moving forward here. Going back to the cash flow is, and I mentioned this beforehand, you will, I can guarantee that not every deal that you bid on is going to be a reperforming note. You may be reperforming for a while, but it may be turned into non-performing, or it's been scratch and dent. I wish every deal we had stayed performing, or got performing, stayed performing. Not going to happen. So you're going to have some deals that you just do end up foreclosing on. You're going to have some deals that you get deed and lose cash or keys from. Some deals where they file bankruptcy. I like bankruptcy. It turns into either a performing note or a non-performing note that you take the asset back. So that's the thing to keep in mind. If you need to make 80 grand a year, that could technically be 8 flips and making 10 grand on average profit off of. If you're making 5 grand wholesale deals, that could be 16 wholesale deals. I think you're leaving a lot of money on the table, and you've got to do a lot of work to make that 16 wholesale deals, especially you're finding deals and making things happen. But that's the thing. Look at your numbers. Look at where you need to be. Look at where you're targeting. Are you in a target rich environment, or are you in a not rich environment? Like I sent an email out yesterday about an asset in South Bend, Indiana. 2 guys in California called me. I want to buy the asset. I'm like, wait a second. You realize this is a note deal, not a property deal. And they're like, what's the difference? And I'm like, okay, this is not ideal for you. And they're like, why was it not ideal? Because there's a borrower involved. There's a borrower paying on this deal. This was a contract for deed. And they couldn't understand. We want the property. I'm like, it's not going to work that way. You buy it, you've got a borrower in it. They're going to be making payments to you until they sell. Either they pay off that loan, and then it's their house, or they go non-performing, then you evict them or start foreclosure to take the property back. There's strategies to everything. Okay, strategies to everything. There's what you have to look at is real estate is only going to get more expensive for the most part. Are we going to see a downturn? Yes, we're going to see a downturn. Big believer we're going to see the downturn. We're already starting to see that in different markets. You're going to see that more on the higher end side. The lower value assets, $100,000, $150,000 or less for the most part, are going to stay pretty solid because of the need and inventory, the demand. I mean, I'll give you an example here in Austin, Texas, and other areas of the country. That first-time home buying area, that area is still very hot. It's the higher priced assets you see a bigger default on. You're going to see some commercial assets already starting to see that stuff go in default. So you just got to figure out which price point you're playing in and realize the higher the value of the asset, the lower the strategies you have. That's why I like the $100,000, $150,000 assets or less. You have a lot of different strategies. That's really kind of gets to the point where it's a maximum of the where rental makes it. If you got to take it back, you still got room there wholesale, fix and flip if you need to. It still can make sense if you've bought the note cheap enough that you've got a good spread between what you paid for the note and what their mortgage payment is. So it turns into a good yield spread of at least 15, 16%, or 20% or greater more is what we're trying to look at, preferably, but at least case you're seeing that number and going from there. So cash flow is king. Let's face it. We all want cash flow. Those that are working JOBs, you've got cash flow coming from a boss that's paying you $5,000, $6,000, whatever. The beautiful thing is here is that your side hustle can replace your full-time gig if you want to. Now, if you love what you're doing, by all means, keep doing what you're doing. Nobody's saying you have to quit. If you dislike what you're doing, dang, it's time to start making changes to what you want to do. Okay? That's the important thing to keep in mind is we all hold the keys to the Ferrari. It's a matter of whether you want to get into it, start it up, and drive it. Our mind is an amazing vehicle, and the knowledge that's out there through podcasts and YouTube videos and trainings and things like that is phenomenal. I mean, you've got your old, Indy car pit crew, Brady and Williams, standing by to help you if you really wanted to. It's a matter of you got to climb into it, put on the fire suit, and really spend the time practicing and driving around the lap and figure where you need to be at. And figure your numbers and then do the work. That's what it all comes down to, people. There is no magic red pill or blue pill in Morpheus. Morpheus is not staying there telling you to take one so you can wake up for the Matrix. You have to wake up. You've got to start taking those actions of making offers, of marketing, of reaching out to banks, dialing for dollars. I wouldn't say mailing letters because I don't believe that's an effective use in the note industry, but dialing for dollars, leveraging LinkedIn and Lane Guide and using those tools to really reach out to those that have the assets. And that's the thing that I love about what we do. Sourcing for deals. You have either individuals that have individual properties, or you have banks that control portfolios of assets and they control the debt on that. So that's why I like the note space. It's a much higher target-rich environment for us as investors, because you're going to see non-performing. You're going to see some probably vacant properties that you can take back and fix and flip or add it to a portfolio or wholesale it to other investors if you wanted to. There's a lot of variety of things that you can do to make it a win-win across the board. It's a matter of just focusing in on what you're wanting to accomplish and make things happen. If you're all over the place trying to do a million other things, trying to do all of it, you're not going to have as much success you're going to struggle for success, honestly, because you're trying to be this and this and this. Just try to focus, or have somebody partner with somebody who's tackling the one thing, and maybe you're profiting off each other's things, stuff like that. I wouldn't necessarily say partner. That's just something, maybe a joint venture agreement or something, affiliate where you're working together to make it a win-win across the board. Okay. Now, what's important to realize is it's going to take time. It's going to take vendors. It's going to take people out there, and you can't do it all yourself. And you can try, and you can be that mom and pa investor, mom and pa on a farm with my pick or my pitchfork, and do it one deal at a time. If you want to do that, by all means, great. If you want to use your own funds and wait for stuff, totally up to you. You're just going to have a slower pace of getting where you need to be. You've got to learn to leverage time, leverage resources, leverage OPM to really step into that light, to step into where you want to be and accomplish those big deals. I mean, if you look at the biggest firms, banks, they're leveraging other people's money to make things happen. If Warren Buffett is using OPM to take down things and other assets, or other banks are leveraging OPM, borrowing money from Warren Buffett or other things like that to make things happen, you got to realize if it's good enough for them, it's good enough for you. And you still have the capabilities and the networking will often make it easier for you. As always, you're going to want to talk to your attorney and advisors and accountants to make sure you structure things good. That's why we like to have Aaron Young from Laughlin Associates on here on a regular basis. That's why we love to have Merrill Chandler on here. It's why we love to have other people on here that represent those type of companies, because they're here to help you. They're here to help you keep your head out of your orifice when you're doing something stupid, to really drive towards, staying compliant, staying out of trouble, and make things happen. But let's face it, you're going to run into issues, and that's why you want to have vendors and people that can help you out in those situations. Is every deal going to go smooth? By all, no, at all. The more deals you do, the more likelihood you're going to have something that goes wrong or sideways. It just happened. God knows we've had enough deals go sideways that we have to work through. It just is what it is. But the thing that solves problems, the thing that solves issues, is doing more deals. I learned that from my mentors early on. With their downturn, they went out and bought and sold houses. They went and bought, fixed and flipped, and paid off debt. They went and paid off old investors from their fix and flips and other things. It happens. It's going to happen to all of us at some point. It happened to so many of us that even weren't fix and flipping, that had our property values drop or faced foreclosure or were laid off with everything that happened over a decade ago. It happens. It doesn't mean that those people bad people. It just means that, hey, life happens, and sometimes life's a big crapper sandwich that we've got to take a bite from. So I encourage you all, best actions you can do here over the next week or two is take some time. All right. Take some time, look together where you're at, look at what your year's turning out to be, look at where you want to be, where you want to go, what do you want to live. Our friend Michelle Young loves to talk about visualizing, thinking of ourselves where we're going to be at in 3 years, thinking of where we want to go, thinking of what we want to accomplish, and writing down exactly what we see. And that's the thing you have to realize is, hey, things are going to change, and if you're out there struggling right now, keep your head up, keep your chin up, keep working. You'll come through it. You'll be a stronger person. What doesn't kill us always makes us stronger. So keep that in mind, that, look, there's plenty of people out there. If notes are not your thing, you like rentals, reach out to the landlords in here. If fix and flip is your thing, reach out to if wholesaling your things, reach out to other wholesalers in other markets. I mean, there's plenty of markets out there that you don't have to be competing against each other. And that's the thing, reach out to the experts and your peers and take the time to seek counsel. Don't ask for advice from somebody who's never done it. All right. Just reach out to people that are actually out there doing it, going to work every day, doing what you're doing, or week in, week out, been doing it for a while. Not somebody who's talking about it. Oh, this and that. Well, yeah, that's great. Bad things can happen across the board, but literally talk to people that are doing it and doing it on a regular basis. And that's the most important thing that I can tell you out there. If you want to get from where you're at to where you want to be, you have to get outside your comfort level, because what you're doing right now isn't helping you in any sort of fashion. And that's the thing that I see from those that are successful out there is I've taught so many people over the last 10 years, and we see those that are the most successful, the ones that get outside their comfort level. They're the ones that go do what we teach them to do. There are a lot of people that want to learn, but they don't want to take the action because they're nervous or scared. That's fine. You're never going to find success that you want to. Or you may, it's just going to take a whole lot longer till you actually do find it, or do decide that, hey, I've got to take the actions. And what actions come down to? Just day in, day activities, day in, day out activities, night in, night out, whatever side hustle activities to take cash flow. So once again, let's kind of recap this a little bit. Look at where you want to be to figure out what that number looks like. Okay. We're not talking about barely getting by, but looking at what A, you need to do to replace your job, and then B, also to do what you want, what it looks like. Take some time, talk with your spouse. That's a great thing to talk about the 4 quarters you're planning. Don't wait till the beginning of the year or the end of the year to do it. Do it now. Start putting those things in place so that they become habits. You start doing the things on a daily basis to find the success, because it takes 66 days to build a habit. We're in the beginning of September here. 66 days from now will end up being middle of November, Thanksgiving roughly. So start doing things now, and we know what happens in Thanksgiving. We know what happened. I mean, mid-November, end of October, middle to the end part of December is the holidays. Things, you really don't have, 3 months plus left in the year. You've got about 2 months really when you start figuring in holidays, things that go on with that stuff. So take the time right now, look at your cash flow to, you know, if you want to build the cash flow to financial independence, that's the thing. Figure out your numbers. Okay. Figure out your numbers. Look at how many deals you need to do on average. Figure out how many bids you need to make offers on, and figure out how many banks and asset managers you have to reach out to on a regular basis to start building those relationships between now and the end of the year. Because trust me, you start building those relationships now, that phone's going to start ringing come middle of November, beginning of December, as they're looking to move those assets off their books. And so I encourage everybody to do that. If you'd love to, I feel free. You know, drop me an email, scott@weclosenotes.com. We're glad to jump on the phone with you, 5, 10, 15 minutes. Send you a calendar link and schedule time to just visit and see, hey, what's going on with you? How can we best help you? What can we do to help you hit your goals and really achieve the success you want to in 2020? Because let's make 2020 the year that hindsight happens now. Let's take a look at our mistakes that we've made over the last 2, 3, 4 years, or things that we have not done, and turn around and implement them. Okay? Dust yourself off, pick yourself up, get back in the fight, get back in the troughs, get back into the fray of doing things and going out and making things happen. I mean, we're changing some things up on how we're doing business. We're always constantly tweaking things. But I think everybody is capable of accomplishing big things. It's up to you whether you want to do it or don't want to do it, whether you're in your comfort zone or outside your comfort zone. Okay? And I know you can do it. I've seen it happen. I've seen so many of our students who were stuck in a comfort zone finally get out of the comfort zone, and it was just an eye-opening, amazing experience that really helped them go to the whole next level. They've really accomplished so many things that they let something big kind of be a mind block and a dead weight on them that they were dragging around and we sat down and realized and came with a game plan for them and realized that, hey, we can knock this out. We can take advantage and really knock this thing out, your goal in the next 12 to 18 months, to the point that you are smiling, you're dancing, you've got a little, bigger step in your gait and making things happen out there. And that not only changing your life, but also changing your family's life, your kids, your friends, changing, because they will notice that life. They may give you a hard time to begin with, but they're going to start seeing changes if you stick to it and you share with your goal. Hey, I'm working towards this goal. This is what I'm working to accomplish. Share it. If you share a goal and somebody laughs at you or they make fun of your goal, they are not your friend. They never were your friend if that's the case. All right? If you are sharing something that you're working towards and they're truly your friend, they're going to support you. They're going to try to help you in any way. I know that's what I like to do with my friends. They give me a goal and what they're working to. Hey, how can I help? Talk to this person. Or have you thought about this? Can you add this? I don't like to talk down if somebody's got a goal and dream that they thought about. That's the worst thing you can do. Now, you can give some counsel. We bend down there and say, hey, I've been through that before. Why have you thought about trying this? Because there's usually more than one way to achieve your goal. There's more than one way to get your numbers done. Like I said, maybe you're buying some notes and you got an opportunity to buy a rental to bring in some cash flow. Great. Throw that in your deal flow. Maybe you're going to start off by renting your spare bedroom as a way to build a little extra cash. Hey, there's nothing wrong with that. Okay? There's multiple ways to get things done, and I highly encourage you to do it. Take the action. Get started. Use what we have left in 2019 to make 2020 not the year of hindsight, but the year of foresight, where you can see that goal happen. You can see the actions. You can see the light at the end of the tunnel for you to hit that financial freedom and how you make your cash flow goals something that you accomplish and make it a goal and a dream that comes true to live a life that you want to achieve. If you're going through a tough time, hey, make it the next 90 days to get out of that, to get beyond that, or get it almost wrapped up. There are so many things that you can do to really make things better on yourself. Hey, maybe you need to trim some expense. Maybe you need to cut some costs. Maybe you need to look at the activities that you're doing on a daily or weekly basis and realize, I need to tweak what I'm doing and take things to a whole different level. So highly encourage you to do some amazing things. Everybody is capable of it, all right? Everybody is very capable of accomplishing things. I don't care if your goal is $1,000 a month, or $2,000, $5,000 a month, or $10,000. You can work to those goals, and I guarantee if you work hard, stick to it, follow through on your goals, set specific things, know what your KPIs, your key performance indicators are, and surround yourself with like-minded individuals and counsel and mentors and coaches to help you get there. You can get there. You can achieve amazing things in 2020. I know it's 2019 right now, but guys, Rum wasn't built in a year. It wasn't built overnight, but you guys can go out and really get that foundation in place and start paving the road to your castle, to your cash flow success. So, like I said, guys, feel free to drop me an email at scott@weclosenotes.com. Love to hear from you. I'd love for you, if you guys are listening to this on iTunes, please click on over to iTunes and leave a review, or Stitcher. And as always, feel free to subscribe to our YouTube channel to get alerted when we have new episodes available. Otherwise, have a great day, everybody, and we'll see you all at the top of the